Hello everyone, welcome to my channel. Today we'll discuss about some other basic fundamentals and financial ratios which you have not discussed in our last video. If you haven't seen my last video, I have mentioned the video link in the description below. Without any delay, let's get started. Before we are going into the discussion about the three key profitability ratios, we need to understand how investments are made. Suppose I am thinking to start a new company and for that I need money. The investment needed to start this business is 40 crores and I only have 20 crores in my hand. Then from where I will get the remaining money from? That time I will gather the additional 20 crores money either in the form of equity or by taking loans from banks. In equity method, as a owner of the company, I will reach out to the investors or family friends to explain my business plans and ask them to take a partnership in the company in the form of equity. If the investors are happy with my business plans, they will take partnership in company. In this way, there is no scope for interest on the additional 20 crores amount as investors took partnership in the company. Coming to the debts, for suppose either I don't want to share the partnership with people or due to investors are not interested in my business plans, I will reach out to banks to get the remaining 20 crores. But in this condition, according to my assumption, as investors are interested in my business through equity, I am able to arrange 40 crores to start a company. After 1 year of business, suppose the company has gained the profit of 20 crores. In that profit, 10 crores will be my profit as a owner, having 50% stake in the company, and remaining 10 crores will share among the 50% stakeholders. Now we will see the three important ratios and how they are using the resources efficiently. In that, first one is ROCE, which means return on capital employed. Here, capital employed is combination of equity and debt funds. So, ROCE is basically how much return a company is generating on their equity and debts. The higher the ROCE, the more profitable for the company. So, ROCE is a useful ratio when company is bearing debts in their hands. And as an investor, I will check how efficiently companies are handling the resources and able to generate the return. In this particular example, ITC has an ROCE of 28.6, which is a good sign for investment checklist. Ideal ROCE should be equal to at least the twice current interest rates. Now we will see what is return on equity. Suppose you are a shareholder of the company and if you are interested to know how much returns the company is generating on the equity, the formula for ROE is net profit divided by shareholders' equity. In ROE, we won't include debts taken by the company. For example, the shareholders' equity of a company is 20 crores and the net profit in the financial year is 5 crores. Then ROE will become 25%. The greater the ROE, the positive for the company. ROE is useful mainly when the company is not having any debts in their hands. The ROE of ITC is 21%, which is very good only. Ideal ROE should be greater than 15%, then it will be considered good. The next one is return on assets. It is the ratio of total net income to the average total assets. It will tell us how much return a company is generating on its assets. We will understand with an example. Suppose company X is having 100 crores assets and generated net profits of 10 crores and company Y is having assets of 500 crores and generated net profit of 20 crores. If you apply the formula, the return on assets of X and Y are 10% and 4% respectively. So here company X is having high ROA than company Y. That means X company is using their assets effectively to generate the profits. This is all for now. Remaining fundamental and financial ratios which are not yet discussed, such as cash cycle, dividend yield, face value, asset turnover ratio, share split, promoter holding, PAT margin, and bonus shares, etc. We'll see this in our next part of the video. Please let me know in the below comment section if you are expecting any other content from this channel. Thank you all. If you like the content in this video, please do subscribe my channel, Iconic Adda, and share it with your friends. Thank you very much.